Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to CUNY. Good evening. Today is Monday, November 10th. I'm analyst Jiang Jida. Please give us 312s, like, subscribe, and share. If you have any investment questions, feel free to leave me a message. If I don't have time to answer today, I'll make sure to follow up with everyone in tomorrow's class. Also, just a reminder, since October and now November, the US is on winter time, so our program will be extended and the live broadcast will start at 9 o'clock. The live stream starts at 9, and I believe most of you already know from last week that the live broadcast now begins at 9 o'clock. But I'd also like to ask everyone, no matter how many of you are online, it's the same for all students. Good evening, Hui Wan, good night, Mei Dai Jie. And who else is here? Yulin Ge, Alice Fool, and Gondrin, good evening to all of you. Let me ask everyone, do you prefer listening to the live broadcast at 8 o'clock, or do you prefer to follow daylight saving or winter time and have the live stream at 8 or 9 in the evening? For example, now during winter time, our program starts live at 9 o'clock. This isn't pre-recorded, it's live right now. During daylight saving time, the live broadcast is always at 8 o'clock in the evening. You can also write down your thoughts. Do you prefer having the live broadcast fixed at 8 o'clock, or do you want it adjusted according to winter and summer time? Share your thoughts with us. If, after gathering everyone's feedback, it turns out most people don't want to adjust the schedule with daylight saving and winter time, even though that would mean the release of economic data or the opening of the US stock market would be a bit later, we can consider that. If you prefer having different time slots for winter and summer time, you can write down your thoughts as well. And if you like having a live broadcast fixed at 8 o'clock, you can also let us know your preference. Alright, let's get into today's main investment highlights. Alright, let's have some fun and take a look. Will the US government possibly reopen temporarily? Here's a major preview for this week. As we know, for almost the past 40 days, the US government has been in a shutdown. That's mainly because the Republicans and Democrats have been unable to reach an agreement on policies related to healthcare and medical assistance. Since they couldn't agree on statistics or reach consensus, the government has been shut down for 40 days. But today, there's been a small change. I'll explain soon what this change is and how it might let the US government reopen temporarily. Why temporarily? Because even after talks, the government could shut down again. That's not guaranteed to change. There's a temporary funding bill, and this temporary funding bill will only provide enough money to keep the government running until the end of January. In a bit, I'll explain the details of this bill. Also, this Monday, we'll be sharing more information with everyone. What are the key data releases and economic events this week? Here's a preview and what to watch. In the industry, Jensen Huang is throwing cold water, and Microsoft executives are selling stocks. Jensen Huang is NVIDIA's CEO. Who is he throwing cold water on? Elon Musk. Why is he throwing cold water on Tesla's sheriff, Elon Musk? Because, as we know, last week, on November 6th, Tesla held its shareholder meeting. The main focus of the meeting was, of course, Musk's $1 trillion compensation package, which, not bad, ended up being approved. But even with that approval, you'd expect Tesla's stock price to react positively. So why did Tesla's stock actually open high and then close sharply lower with a big red candlestick last Friday? Of course, this has something to do with Jensen Huang throwing cold water on things. The cold water he threw includes issues like semiconductor foundry setups, and even the possibility that Tesla didn't get approval for the so-called XAI AI platform, which also had an impact. So, if you're holding Tesla-related stocks right now, how should you be looking at them at this stage? Should we really take Jensen Huang's arguments as a reference, or just listen and not take them too seriously? Another important point is that Microsoft's top executives have been selling stocks. As for Microsoft, at the end of October, they just released their latest Q3 financial report. The report itself was pretty solid, quite good actually, but their capital expenditure for the third quarter reached nearly $35 billion, hitting a new high. This has sparked concerns in the market about the pressure from such high costs. So under these circumstances, with the market continuously investing capital in AI-related stocks and the cost of borrowing steadily rising, Microsoft's top executives have chosen to sell their shares at this time. Even though the amount and number of shares sold are particularly high, it's still noteworthy. But this has still created a certain degree of pressure. So, who exactly is selling these shares? If you're holding stocks related to this sector, how should you view the current market and even individual stocks? We'll break it all down for you in tonight's show. Hey everyone, welcome! With these new accounts, I can't tell who's who anymore, so I'll read your usernames. Who's this? ZNW473, hello. You said 8 p.m. is the best time, right? And there's Caesar, good evening. Long time no see. And YILO, wait, is it YIJ or YI902502? Who is this? I can't tell just from your username. Oh, and to the friend in the Philippines, good evening. And also, hello everyone, it's been a while since my last stream. Good evening, XIN Sinyan and everyone else. Let's get started. Share your thoughts, should the stream start at 8 or adjust for winter and summertime? Tomorrow, I have more questions for a poll. We'll discuss that then, and I'll share new ideas. When we get to the news, let's review. Last Friday, I wasn't the one streaming, right? Let's review last week. Last Friday night, around 9:30 or 10 o'clock, what kind of data came out? After our show ended, there was some data that I might not have had time to follow up with you on, including things like the US November 1-year and 5-year inflation expectations. This was also released last week. For the 1-year inflation expectation, the previous value was 4.6, the forecast was also 4.6, and the actual figure was 4.7%. The impact isn't significant. The 1-year inflation rate has stayed between 4.5 and 4.7, and this hasn't changed even as tariffs continue. It hasn't gone back above 6%. So, for now, when we look at overall inflation, everyone's expectations for 1 year or 5 years remain steady. It's relatively stable, relatively steady. Of course, to some extent, the market sentiment also reflects that there are still expectations for monetary policy, for the Fed's monetary policy, to continue moving toward rate cuts. Of course, whether or not there will be a rate cut in December, I'll also talk more about that with everyone in a bit. What are the attitudes of the relevant committee members toward a rate cut in December? But just looking at the market sentiment, from the market's perspective, the 1-year and 5-year inflation expectations have both remained at about the same level recently. There hasn't been any significant fluctuation in the current situation. As for the 5-year rate, it's actually come down to 3.6%, which is even slightly lower than last month's figure of 3.9%. So, the market is basically telling us that, at this stage, inflation also seems to as scary or as heated as people might have imagined. In addition, in November, the University of Michigan Consumer Sentiment Index was relatively pessimistic. The bank released last week's previous value at 53.6, with an expected value of 53.2, but the actual figure announced dropped sharply to 50.3. This has set a new low since June 2022. If you look at the arrow here, you can see the low point in 2022, which was around 50 at that time. So now, at 50.3, it's almost back to the low point of June 2022. Of course, why is consumer confidence so low? There are basically two reasons. One is the US government, just the fact that the government shut down for 40 days. Another concern is that, as the trade war negotiations continue and the disputes go on, people worry whether American consumer spending will decline due to inflation and rising prices. If consumer spending drops and corporate revenues and profits fall, that means the US GDP and economy could also weaken. So that's what everyone is worried about. In addition, regarding the government, a government shutdown would also affect many aspects of government operations, its normal functioning. So people are also worried that GDP could be impacted if the government shuts down. Of course, all of these factors have contributed to the preliminary value of the University of Michigan Consumer Sentiment Index for November. When we say preliminary value, we mean the initial reading at the beginning of the month. The preliminary value dropped to 50.3. Of course, as we said, the level of confidence really depends on the current market atmosphere, the current market sentiment. The tone set by the government shutdown and the impact of inflation on prices will naturally cause this preliminary value to fluctuate up and down. If these two factors are removed or if their impact decreases, the consumer confidence index will correspondingly rise. So, it's really like a seesaw, just take it as a reference, there's no need to treat it as a major negative signal. It's simply a reflection of market sentiment. So, just because it drops to 50 doesn't mean the stock market will crash, it's not that serious. But for reference, it did fall to this level back in June 2022. Alright, as for the officials, will there be a chance for a rate cut in the December interest rate decision? Personally, I think the probability of a rate cut in December is actually pretty low. It will probably drop below 60%, maybe even close to below 50%. Why do I say this? Besides the fact that, well, at the end of October, meaning the November rate decision, at the end of October, they already made a precautionary rate cut. From the rate cut in September to the one at the end of October, the Fed, led by Powell, has already told everyone that they have made 2 consecutive so-called risk management precautionary rate cuts. After this rate cut, however, many officials became confused because the government shutdown prevented clear economic data from being released. This left many officials uncertain and wondering what kind of situation inflation would actually present in the market going forward. They really couldn't see things clearly. It was like the blind man feeling an elephant. So, many officials are actually taking a more cautious approach when it comes to whether or not to cut rates again in December. In other words, I think the chances of a rate cut in December are not very high. This includes what Jefferson, the vice chair, said today. He mentioned that interest rates are now close to a neutral level. To briefly explain, a neutral rate is: this interest rate level means that it won't cause the economy to overheat, but it also won't push the economy into a recession. In other words, it's what we might call a balanced or moderate level from a Chinese cultural perspective, not too high, not too low, just right in the middle. So, we refer to it as a neutral interest rate level. That's why Vice Chair Jefferson said that the current interest rate level, at 3.75% to 4%, is neutral. It should be close to what's called the neutral level, according to this argument. So, it's reasonable to slow down the pace of monetary policy adjustments. What does that mean? It means he thinks the interest rate decision in December should just stay the same. If there's any adjustment, maybe it could wait until next year to see how things go. As for the whole inflation issue and the tariff war, no matter how the Supreme Court rules, they'll respond accordingly. That's the thinking. Also, just to add a bit more information for everyone, in May next year, Federal Reserve Chairman Powell will be stepping down. After Powell steps down, there are currently about 5 candidates who have a good chance of taking over. Let's briefly go over the backgrounds of these 5 likely candidates. I'll talk a bit about their strengths and backgrounds so everyone can be mentally prepared. Also, just so you know, before December 25th, Treasury Secretary Bessent reminded everyone that possibly after Thanksgiving, or even around Christmas, the final decision on the second round of interviews for the Fed chair candidates will be announced. The plan is to provide Trump with about 3 candidates to choose from, okay? Right now, about 5 people have a better chance, but by Christmas, they'll narrow it to 2 or 3 candidates. So, who are these 5? The first is current board member Waller. Should you remember this name? Waller has a solid academic background and supports what's called preemptive easing. It's kind of like, the so-called preemptive rate cuts we saw in September and at the end of October this year. It's a similar concept and stance. Then there's Bowman. Both Bowman and Waller are basically candidates favored by Trump, and they also tend to support Trump's more accommodative policies. Bowman has some prior experience in banking or financial regulation, and she tends to focus more on the state of the labor market, whether it's weak or strong, when making decisions about monetary policy. So, Bowman brings regulatory experience and places more emphasis on the labor market. Also, the former Fed governor is named Walsh. Walsh advocates for a more flexible monetary policy, which of course means a somewhat more accommodative stance. Then there's the economic advisor Hassett. The current economic advisor Hassett is, of course, considered one of Trump's core allies and main supporters. Lastly, there's a senior executive from BlackRock named Reeder. Reeder is highly respected in the financial industry. So, these 5 candidates each have their own backgrounds. So, at the moment, it looks like the main contenders are Waller, Walsh, and Hassett. We've mentioned before that Waller has a higher chance of being appointed, a greater likelihood of taking office. But regardless of who actually gets elected next year, just remember, no matter who wins next year, keep in mind who it is. They all tend to lean dovish, meaning their monetary policy is more accommodative, moving toward rate cuts. But for this December, there probably won't be any changes to the interest rate decision. The chances are very high that rates will stay the same. However, we can still look forward to possible rate cuts next year. Now, let's take a look at whether the government shutdown might be temporarily avoided. This is something that could be resolved for now. Why? Because today, in the U.S. Senate, even though the Democrats are proposing the ACA, the Affordable Care Act, and suggesting that subsidies could be postponed for another year to reach an agreement, the government shutdown. Of course, the Republicans are saying no, they're rejecting it, but what about the Senate? The majority leader in the Senate, right now, both the Senate and the House of Representatives are controlled mainly by the Republicans. They have more seats. So, who is the majority leader of the Senate, the Republican leader? Mitch McConnell. He said that negotiations have made some progress today, and they're moving forward with what's called a temporary funding bill. To put it simply, this temporary funding bill is the result of negotiations between the 2 parties, and it means that there's a sum of money available now that can support government operations until next year. the government will be able to operate normally until the end of January. As for what happens after the end of January, whether the government will shut down then, that's something to be discussed at that time. At least for the next 3 months, the government will have funding. And if the government has money, then of course, things like the Consumer Confidence Index, prices, and so on, the functioning of the government will be more on track. When things are on track, the economy and the stock market tend to move in a more positive direction. Of course, a very important reason for all this is that, even though the two parties are bickering, I think the main point is, as we've mentioned before, regardless of whether the government shuts down or not, it has already set a record. Previously, during 2018 and 2019, Trump's government shutdown lasted 35 days. This time, it's already been 40 days, and it might go beyond 40 days, maybe even up to 45 days, or maybe the bill won't pass until next week or even later. No matter what happens with this government shutdown between the two parties, you have to remember one thing: when the US government shuts down, the first thing is, it happens often. It's not something that never happens in a lifetime. Government shutdowns happen all the time. As long as they can't reach an agreement, or if a bill isn't settled, they'll just shut down the government. So, a shutdown isn't some rare event, it actually happens quite frequently. But what's interesting about the US is that, when the government shuts down, some important departments stay open. For example, the Department of Defense might not close, and some things probably keep operating. So, basic government functions remain, they keep running. Usually, a shutdown only causes what's called a short-term negative impact, just a short-term downside, but in the end, the government always reopens, right? It always does. If it didn't, officials wouldn't get paid. So, when the government shuts down, remember, in the US, this happens often. It's not new or unusual, it happens all the time. Second, when the government shuts down, don't treat it as some huge, catastrophic negative event, okay? Because in the end, it always reopens. And once it reopens, what happens to all the economic problems? They're gone, nothing happens. So why do I say that this time, just like before, it's not a big deal? There's a major reason. Don't forget, next year on November 3rd, there will be the so-called midterm elections for both the House and the Senate. Both parties are under pressure because of this election. Both parties are feeling the heat. Why? Why is there pressure, and why is the pressure even greater today? Why is the pressure greater today, especially for Trump and the Republican Party? Why? Because something happened last week. This event gave the Republicans a bit of breathing room, made things a little less tense for them. What happened? If you saw the news, last week, the mayor of New York City. Oh, one thing I know is that, I heard, for the first time in the history of the bus, the first Muslim, an Islamic person, this person took office as the mayor of New York City. Only 35 years old, I remember, 35, very young. His wife is 28, also very young. So, the New York City mayoral race, and then there were also elections in places like New Jersey, and then somewhere in California, and also Virginia, right? The governor races, so, the governor elections in New Jersey, Virginia, and California, plus the New York City mayoral election. All of them were won by the Democratic Party, every single one. So I think, to some extent, this is going to put pressure on Trump. Like, with all these tariff issues, the government shut down, and in the end, public opinion shifts. People just start to turn against it, and simply don't want to vote for the Republicans. So, this kind of preliminary election, this kind of prelude, the atmosphere is really unique, just like that. But what if your opponent ends up winning instead? Then I believe that, moving forward, Trump will have to be more cautious with his policies, whether it's about tariffs or bipartisan negotiations. If he doesn't handle things well and something goes wrong, he might not even need to run in next year's election. It could end up with both the House and Senate completely switching hands, which would be a huge problem. He'd become a lame duck president. So, since there's this election pressure, I think the US government shutdown probably won't last too long. It should come to an end, and things will probably start moving in a better direction pretty quickly. Alright, hello, Ice Boys voice, good evening. Who is Ice Boys? I have a guess, but I can't tell just from the username. Alright, TSMC's revenue, someone asked about that. Melissa, good evening. Let me check your messages for questions. Someone said to coordinate with the US stock market. Okay, got it. Some people want it at 8:30. I'll check the stats later to see which time most people choose. TSMC's revenue grew 17% year on year. So, for 2024, is there anything to worry about? I'll talk about that in a bit. I'll also discuss some TSMC-related topics later. Anyway, TSMC's revenue is still pretty good. I'll share more details with everyone soon. But even with these good numbers, whether it's from a technical perspective or in relation to Jensen Huang, you all know Jensen Huang attended TSMC's sports event, right? They were all wearing red sports t-shirts, right? And standing next to CC Wei at the TSMC sports event, the event was packed with stars. What did Jensen Huang say to CC Wei? I'll tell you soon. Jensen Huang did speak to CC Wei, and it was recorded. This is closely related to TSMC's future development and revenue growth. TSMC's October revenue and profit performance was also good. How good was that performance? I'll discuss that soon, just wait. In this open and closed situation, everyone should know that even if there's short-term negative news, it likely won't last, they'll probably open again soon. As for what Besant said about the economic impact, we know a government shutdown affects the economy. Alright, so he said that anyway, there's been progress on inflation, and prices should go down in the coming months. Now, as for the current timing, the probability for a rate hike is at 4.14%, with the terminal rate at 3.7. The number of expected rate cuts has dropped to 0.6 times. So, at the moment, it really looks like the chances of keeping rates unchanged in December are pretty high. The US dollar index is also doing well, staying above the 50-day moving average, and now it's aiming to challenge the 200-day moving average, which is that brown line. A couple days ago, when it tried to challenge it, it didn't get through. The price hit the 200-day moving average and respected that resistance. After pulling back, we need to watch the 20 and 50-day moving averages. If those hold, the chances of the US dollar breaking new lows are slim. That's the situation. If we zoom out a bit and look at a longer time frame, honestly, from June of this year up until now, almost 5 months, with November approaching, the market has really just been moving sideways. Sure, sometimes it goes above the 50-day moving average, sometimes it drops below, moving up and down, but to be honest, it's still in a consolidation range. It's still in a consolidation range. The only question is when this range will turn into a stronger trend, but for now, we can't see that happening yet. Still, it's definitely stuck in this consolidation phase. So, the 200-day moving average is basically acting as short-term resistance. As for support, you can just look at the 20-day or 50-day moving averages to observe the short-term fluctuations. That's enough for monitoring the short-term moves. Now, regarding geopolitical risks, China and the US, well, you really don't need to worry about China and the US. Like today, China announced a suspension of rare earth export controls until next November, and the US also canceled the 301 investigation on ships. Basically, both sides are extending olive branches to each other. Actually, it's not just olive branches anymore, they're bringing out whole olive trees. It used to be just a branch here and there, but now it's like 2 big olive trees being exchanged. So, there's a 1-year trade truce. We actually talked about why it's set for 1 year on our show a couple of weeks ago. It's not a 2 or 3 month truce, not even half a year. Why? Why must the truce last a whole year, all the way until next November? As I mentioned, it's because both parties have elections on November 3rd next year. So, with the government shutdown, first, it won't last too long. Second, why does the US-China trade war truce need to be extended until November? Because extending it for a year, until next November, is when both parties have elections. The US just doesn't have time to deal with this now. They really don't have time for it. The US doesn't have time to deal with China now. They're busy with the election. So whatever happens with trade war talks, for now, they'll leave things as they are. Neither side will make big concessions. For reciprocal tariffs and export controls, I won't enforce them strictly, and maybe I'll even relax chip controls a bit. So I'll also cancel the Section 301 investigation, and I won't restrict rare earth exports either. Alright, let's just wait until next November. After we see which side wins the majority, then we can talk things over slowly. For example, if by next November both the House and Senate are controlled by the Democrats, then there's really nothing for Trump to negotiate about anymore. So it would just be someone else fighting, let the Democrats negotiate with China instead. That's the idea. A 1-year truce, I think that's fine too. It gives the stock market and economy a breather, and then we can see how things are next November. About the Ukraine-Russia situation, honestly, just keep an eye on it, that's enough. Trump said he hopes to meet with Putin in Budapest, which is the capital of Hungary. Last week, as we know, Trump was being tough as usual. He said, I don't want to talk to Putin, because Putin never listens, he just keeps fighting and won't agree to a ceasefire. Both sides are stubborn, so Trump said he wouldn't talk to him. But now, today, he's saying he hopes to meet with Putin again. So it's just this back and forth, over and over. Also, regarding Ukraine, Zelensky said they would impose some sanctions on Russia. But honestly, I feel like these Ukrainian sanctions against Russia are pretty much ineffective. They don't really have any impact at all. There's just no real effect. For example, sanctioning Russia's special presidential envoy, does that make any difference? It doesn't seem to matter at all. So whatever. As for the Russia-Ukraine conflict, it's just continuing as usual. As for crude oil prices, even though they rebounded by about 1% today, overall, they're still relatively low. Right now, the crude oil market is still pretty weak. As for important economic data, some people mention 8+1. Okay, whether it's 8+1 or the whole daylight saving time thing, just write down your thoughts, your comments. Hey, 5750, hello, 5750. When I read out account numbers, do you guys realize I'm actually talking to you? Because in the past, that's what you guys would do. There used to be names, like my Daisy or something else. Anyway, there were Chinese names. Now there aren't, so I don't even know. When I read out names, do you realize I'm talking about you? Wailing 90, good night, warning 90, good night. Now, about the economic data part, let me tell you, Monday and Tuesday don't have anything important, so just take it easy, nothing much to worry about. Just take a look and that's it. On Wednesday, there are more official speeches, and also, if you're trading crude oil, pay a bit of attention. Wednesday has the OPEC monthly report, and Thursday has the IEA and EIA monthly reports. OPEC, IEA, it almost sounds like a tongue twister, right? These three major monthly crude oil reports are released once every month, and usually, they're all published within a day or two of each other. So, if you're trading crude oil, you need to pay attention to these reports. Look at the demand growth, the supply situation, what's going on with Saudi Arabia, OPEC, OPEC+, and so on. Also, keep an eye on U.S. oil production forecasts and what the projected prices are. For these three major oil reports, you absolutely have to pay close attention to OPEC, IEA, EIA. So, these three major oil reports? They're going to be released this week on Wednesday and Thursday. Of course, when it comes to important economic data, I think Wednesday doesn't really have much, just the OPEC monthly report. But on Thursday and Friday, you need to be careful with the economic data. On Thursday, pay special attention. Not only will the UK's third quarter GDP be released, but also the US CPI year-over-year and the initial jobless claims will be announced on Thursday. Normally, if the US government is open, Thursday's data would be extremely important. As for Friday's data, it includes the Eurozone's third quarter GDP and also the US October PPI, Producer Price Index, year-over-year and month-over-month. And there's another very important one, which the market often jokingly calls the scary data, and that's the monthly retail sales rate. The monthly retail sales rate? The October retail sales monthly rate will also be released this Friday. And keep an eye on Saturday as well, because on Saturday, in addition to the U.S. weekly crude oil rig count being announced, officials Lovian and Bostic will also be giving related remarks, so pay attention to that. We think that, aside from the all quiet on the Western Front on Monday and Tuesday this week, you really need to pay special attention to the economic data coming out on Thursday and Friday. Of course, even though it's all quiet on the Western Front in the U.S., I still want to remind everyone, when I was just coming on the show, during the previous live stream, I happened to see the latest typhoon update. It's the Phoenix Typhoon. Phoenix Typhoon just passed by, and after crossing Luzon Island in the Philippines, it's slowly moving north due to changes in the air currents. Looking at the typhoon's projected path animation, if it moves quickly, there could be heavy wind and rain in the central and southern regions as soon as Tuesday, which is tomorrow. If it moves more slowly, maybe by Wednesday, and by then it might head toward the central or even northern regions. So, this week, especially Wednesday and Thursday, students in the north need to pay extra attention. In the next days, students in central and southern regions should also be careful. You might wonder if anyone gets a day off for this. Right now, if rainfall is very heavy, like in Inland County, which currently has a day off. In Hualien and Taitung, they also have a day off. What about the north? Are there days off? In the north, only a few places have a day off. Which ones? In New Taipei City, areas like Wulai, Pingxi, and Chongqing mountainous places are off due to landslide concerns. So, the mountainous areas of New Taipei City will have a day off. But that's just the mountains. Urban areas like Taichung, Hsinchu, Taipei City, Zhanghe, Yonghe, and Banqiao are not off. So, tomorrow. Our Kuniying evening program continues as usual, everything stays the same, and it's online. Tomorrow at 9, the Kuniying Good Night program should be broadcast as usual. I don't know if Wednesday will be affected. Though I'd like a day off too, we'll see how things go. Day off or not, I still want to remind all students. Stay safe, okay? Take precautions for the typhoon. Don't think the rain is still down south or anything like that. Right now, wind and rain are strong. I just looked outside, and here in the north, where I am, they're getting stronger. So everyone, please pay extra attention. If you can, stay indoors. If you must go out, take proper safety precautions for the typhoon. Please pay attention and stay alert. As for the earnings reports this week, around November 12th, keep an eye on Infineon and Growatt's earnings. On the 13th, there's Disney, and on the 14th, the more important one is Applied Materials. So honestly, I think the most important one this week is Applied Materials on November 14th. The others are just okay, or even not that great, mostly smaller or mid-sized companies, or ones that won't have much impact on the market. So just pay a bit more attention to Applied Materials on November 14th, alright? Alright, 8 or 9 o'clock. Let's not make it too late. It's tough on the teacher too. Honestly, if we did the live stream at 7, that wouldn't be bad. Do the live stream, then go home and have dinner. Sounds nice, right? You like seeing me live stream every day. Huh? I'm just hanging out, thank you. Every teacher in our Kuning group who says goodnight has their own unique style. Each of us has our own special session and unique style, right? Okay, let's go normal. This should be Jeff Lin, right? Good evening. Yeah, you can live stream from home. Whenever there's a typhoon, I always live stream from home, but I just do it using audio. If you check out our group's goodnight messages, or sometimes the morning call live streams, you'll probably notice that each teacher has their own unique style. Of course, for example, take Mr. Fan, for example. In the morning, his show is all about professionalism. He covers everything. Taiwan stocks, US stocks, European stocks, you name it. Every time I watch, I wonder how he prepares so much information so quickly. Sometimes he even starts getting ready in the middle of the night. He talks about the Japanese and Korean stock markets. Basically, he covers markets worldwide. It's all-encompassing. When he talks, he covers so much that you have to pay close attention. If you zone out even briefly and don't listen carefully, you'll forget what he just said. Because there's so much valuable information and so many numbers. You really have to think about it. In the mornings, we might have teacher Xie Runchang, or maybe Huang Kongrui or Dong Jiaxian. There are so many teachers, right? And then in the evenings, there are also a lot of teachers who take turns leading the sessions. There's Teacher Dong, Teacher Huang, and even last week, for example, Teacher Yuan from China took a turn. They all rotate and take turns with each other. So every teacher and every analyst has their own unique style. I believe that whether it's during the morning call or in the evening sessions, you can always get firsthand, important investment information, as well as plenty of investment strategies and educational content. Each person's specialty is a bit different. Some are more focused on macroeconomics, some specialize in US stocks, and some are really good at storytelling. That's basically the idea. Okay, so coming back to our main topic, aside from the earnings report and the observations on Applied Materials on November 14th, this is actually the biggest issue. Now, looking at the industry side of things, let's take a quick look at Tesla. On November 6th, last week, we mentioned that the shareholders' meeting approved a $1 trillion compensation plan. However, the proposal for Tesla to invest in XAI was actually rejected, turned down. So, if Tesla wants to expand its presence in the AI sector, there might be some changes or uncertainties now. Of course, we'll keep watching to see just how much of an impact this change will have, because honestly, all these companies are still under Elon Musk's umbrella. So even if Tesla doesn't directly invest in XAI, it's still all within Musk's group of companies. So, does this mean that everything is now completely separated and cut off? I don't think it's that absolute, not really. It's just that, for now, this particular proposal was voted down. Now, the second thing is that Musk said he wants to build his own chip factory because he claims that in the future, things like AI robots and the AI industry as a whole will need a huge number of chips. He's worried that, whether it's Samsung or TSMC, their chips might not be able to fully support the high-end chips he needs. So, he's considering working with Intel to build a factory to set up a foundry for chip manufacturing. Of course, regarding this matter, today Jensen Huang came out and commented. He basically poured cold water on the idea. He said that Musk is considering building his own chip foundry and mentioned a production capacity of 100,000 wafers. But in his view, running a wafer fab like this actually involves a lot of advanced technology, and it's an extremely capital-intensive industry. It's not like just because you have a lot of money, even if you're the richest person in the world, you can produce the most advanced chips with the latest processes. That's not how it works, not at all. Take Samsung or TSMC, for example, they hold a ton of patents. So honestly, Musk, I still think you should focus on your main businesses first. Your electric cars, your XAI, your robots, or your FSD. Even things like autonomous taxis, Neuralink, or SpaceX, get those right first. Get things like the Space Shuttle, Starlink, and all that sorted out. Take care of both your main businesses and your side ventures, and do them well. For things that aren't your main focus or areas where you're not as skilled, just leave them to the professional manufacturers. For example, Samsung and TSMC, their processes and patents are incredibly strong. They can design and produce wafers with extremely high quality and yield. That way, whatever you want to develop next, whether it's electric vehicles or robots, will go really well. Don't think about trying to imitate Intel. I don't think you should try to be like Intel and set up your own wafer foundry or manufacturing plant. Even now, Intel's wafer foundry business is still losing money. And they're losing money left and right. Every quarter they're losing 4 or 5 billion, sometimes even 7 billion US dollars, and they're still losing money. So I think Tesla, well, I think Jensen Huang is right. Just focus on your area of expertise. And for things you're not good at, let TSMC and Samsung handle the manufacturing for you. Because TSMC's quality really is excellent. It's the best in the world. Right? Don't be like Intel and blindly build factories. If you really insist on building your own fabs and doing your own chip manufacturing, your stock price is going to tank, it'll go down. Because that's extremely, extremely expensive, and not only does it burn money, but you also won't be able to achieve good yields. So why did Tesla just last week? Even though that $1 trillion compensation package was happily and grandly approved, the stock price actually opened high and then dropped. That's why. Because he's starting to mess around with all sorts of things again. When he does that, people start to worry. So, as we saw last Thursday and Friday, Tesla's stock dropped for 2 consecutive days. On Friday, it fell by nearly 3.7%. After dropping 3.7%, you'll notice it landed right above the 50-day moving average. In the short term, the 50-day moving average, the quarterly moving average, is trending upward. So as long as it holds at the quarterly moving average, there shouldn't be any major problems. As always, the same saying applies. Take care of your main and side businesses. First, don't get involved in politics. This is for you, Musk. Second, don't spread yourself too thin. Don't try to invest in everything. If you do, you'll be stretched too thin. And if you insist on entering areas outside your expertise, like upgrading to a semiconductor foundry, that's just asking for trouble, a huge hassle. For Tesla, as long as the stock price stays above the 50-day moving average, there's no need to worry. Just watch what Elon does next, what he's planning. Also, a bit about TSMC. TSMC. Someone just asked about TSMC. Their revenue has been strong. In October, revenue was 367.4 billion NTD, new Taiwan dollars, not US dollars. 367.4 billion NTD is up 11% month over month and nearly 17% year over year, a new record. For the first 10 months, revenue also hit a high, reaching 3.13 trillion NTD this year. In NTD, that's an annual increase of nearly 34%. And this time, when CC Wei announced the financial report and revenue, he also said that he expects this year's revenue and profits to hit new highs again. So, will they set new records? He says they will. When the chairman himself says it, it's basically a sure thing. You have to understand that every company's chairman has their own culture and integrity, and each one is different. If today it was the CEO or chairman of some other company saying their revenue might perform really well this year and hit a new high, we'd all just take a look and not necessarily believe it. People really do pay attention, for example, you know who I'm about to mention, right? Anyway, take the wafer foundry industry. There are basically 2 big giants, TSMC and another company. Now there might even be a third giant. When the CFOs or CEOs or chairmen of those other companies speak, people tend to take it with a grain of salt. But when TSMC's chairman, CC Wei, speaks, usually, you wouldn't dare speak carelessly. Why? Because institutional investors worldwide, domestic and international, even government funds, are watching. He's very important, the guardian of Taiwan's tech industry. So when he says this year's revenue and profits will reach new highs, you can trust that. There shouldn't be any problem with that. And then there's Jensen Huang. Today, he was very clear when talking to CC Wei, saying that he hopes to ask TSMC for something. Regarding the 3nm process, he's asking whether the production capacity can be increased by 50%. That's a huge jump, increasing by half. Right now, the monthly output of 3nm wafers is about 100,000 pieces, roughly 100,000 per month. He's asking for a 50% increase, hoping to reach 150,000 pieces per month. Why 150,000? Because, based on the data we've seen, though I'm not sure if I remember it exactly, currently every month, NVIDIA wants to use TSMC's wafers at this scale. That accounts for about 35%. Roughly 35% of the wafers produced by TSMC are supplied to NVIDIA for making those advanced GPUs, like the Blackwell series, the GB series, and even next year's Rubin series will all need them. TSMC's advanced process wafers are essential for these. So about 30% to 35% of TSMC's production capacity is allocated for this. As for other major clients, Apple is also a huge and mainstream customer. In this regard, TSMC also hopes to increase this to 50% to meet the order demand for the Blackwell series. So, looking at it now, as long as the AI industry, especially NVIDIA, continues to grow, keeps expanding orders, and increases capacity, then the rest will follow. The upstream and downstream supply chain, like CSP operators such as Microsoft, Google, Meta, and Amazon, even these companies are still willing to keep expanding their CSP, cloud computing capacity, and computing power, all of which are continuously increasing. As for AI development, if companies like Meta are willing to keep increasing their capital expenditures, spending billions and billions more, and are still in this growth phase, then NVIDIA will keep making money. NVIDIA keeps making money, and who gets the orders? TSMC does. So if Nvidia is strong, TSMC is definitely not far behind, because these two companies are closely interconnected. Okay, so this whole upstream and downstream chain, what we call the perpetual motion machine of AI, as long as none of these companies break the chain, as long as no company goes bankrupt, then the development of AI will just keep rolling on and on nonstop. It'll keep going until when? Until a company collapses, or until something turns into a bubble. But right now, that's not happening because we're still in the growth phase. It hasn't reached maturity yet, so the bubble won't come that soon. But in the future, there will definitely be a bubble, just not in the short term, not right now. So, TSMC. To answer, in terms of current revenue, profits, and performance, I think things are still pretty stable right now. Still pretty steady. Yeah. Of course, since things are still relatively stable, if you want to buy it, you should wait for a pullback before buying in at a lower price. If it pulls back to the 5-day, 10-day, or even the monthly moving average, gradually buying in at those points would be a safer approach. After all, the stock price has already hit a record high. Alright, next, let's take a look. Flying Fish, good evening, though it seems it's already late, so good night as well. Okay, good. Someone said this is an 8 o'clock plus 1. Alright, good. Sometimes I forget the time at 9 o'clock. Yeah, at 9, sometimes I feel like now, at 9 or 9:30, how should I put it? Because right now it's autumn and winter, and during autumn and winter, the weather is especially chilly, especially cold, and now there's a typhoon, so it rains at night, right? And then you see this. Doing a live stream at 8 o'clock and doing one at 9 o'clock, sometimes the feeling you get when you get home is different. When you finish an 8 o'clock live stream and get home, it's usually around 10 at night because we say we'll do an hour, so it doesn't go past 10. But if, like today, we're live streaming now, by the time I get home, it's probably, 11? Yeah, 11 o'clock. It's really, really late, super late. So each time has its own thing, its own unique feel. But getting home at 11, well, doing the live stream an hour later does have its benefits. Doing it an hour later means we have more time to prepare our materials, so there are pros and cons. Of course, that means getting home later and feeling more tired. Okay. As for TSMC's stock price, it dropped about 0.95%. Did you notice? It also pulled back to the 50-day moving average. And when it hit the 50-day moving average, there was a sign of consolidation. So again, let's keep an eye on this 50-day moving average. As long as it doesn't fall below it, there's really nothing to worry about. All stocks are pretty much like this. If they fall below the 50-day moving average, just remember that when they rebound, you should sell off a portion first. Whether we're talking about the Taiwan stock market or the US stock market, especially the 4 major US indices, it's the same situation. The Dow Jones, Nasdaq, S&P 500, or the Philadelphia Semiconductor Index. These major indices are either holding above the monthly moving average or at least above the quarterly moving average. So it's actually pretty simple to make a judgment. If the current overall market, whether it's the US or Taiwan, is staying above the monthly or even the quarterly moving average, then look at the stocks you still hold. What about your individual stocks? If your stocks are also holding above the monthly and quarterly moving averages, then you don't need to worry. But on the other hand, if your stock has fallen below the monthly moving average, or even dropped below the 200-day moving average, you need to recognize that it's what we call a weak stock. For weak stocks, don't get attached or hope for a rebound, even if there is a chance for one. Minimizing your losses is also a kind of gain. Taking a small loss is still a win. Anyway, when the price comes back up, you'd rather take action to cut your losses and switch to stronger stocks, and then buy into those companies that are more stable, have better themes, or have stronger technicals and fundamentals. I think operating this way makes it easier to make money. The price differences are more stable, and it's easier to profit. Otherwise, you might end up in a situation where the index keeps going up and even hits new highs, but individual stocks don't reach new highs. Some might even hit new lows. That's what we call making money on the index but losing on the price difference. So how do you avoid this situation? It all depends on the current level of the broader market. You should compare the position of the stocks you hold with the current level of the broader market. If your stocks are performing worse than the market, remember, those are weak stocks. Don't get attached to weak stocks. It's like being in the wrong relationship. No matter how much you hold on, things won't turn around. A wrong relationship or a wrong marriage. Wrong is just wrong. If things just aren't working out, or if someone cheats, like what happened recently, right? That whole mess with Guagua and Prince, remember? And then Fan Jiang got caught up in all those love triangles and ended up being cheated on. That's what you call a bad relationship. A wrong marriage is just wrong. Whether it's a 1-year marriage, a 7-year marriage, or a 10-year marriage, wrong is wrong. No matter how much you cling to it, try to force it, or want to turn things around, it's just not going to happen. Like Ruifan, there's no going back. When it's over, it's over. So what are you going to do? Cutting through tangled messes quickly, that's how you should handle stocks too. If you need to cut your losses, just do it. If you need to stop the loss, then stop the loss. A small loss is actually a gain. You're better off switching stocks. I think that's a faster way. You don't have to get back up where you fell. You can just lie flat there. Well, not literally lie flat, of course. What I mean is you can choose to get back up somewhere else, and you might find it easier to stand tall that way. So take this as some advice for everyone. Lastly, let's talk about Microsoft. I really like the 8 o'clock live stream time. It's so much fun, especially in the winter. That's just how I feel. Haha. Who was that? Zheng. Good night. And Master Sure, good evening to you too. The memory sector is booming, and the power companies have just announced their revenues. Thanks to user3xit for sharing this info. It seems like Winbond's performance has been pretty good, and even Nanyotech I heard, and I checked their financial reports and they all look pretty solid. They weren't doing well before, but this year their performance has been great. You can see their stock prices have soared. DDR, DDR5, and others, all these prices are rising. For Microsoft, it's worth paying more attention. Microsoft's revenue and profits have been strong. Their Q3 and Q4 financial reports both beat expectations. Cloud revenue in Q3 also rose by 40%, better than expected. As I mentioned, their capital expenditures reached nearly $35 billion. That's a 74% year-over-year increase, so the market is worried that your costs are too high and you might not make it back. But you really don't need to worry about Microsoft not making it back. Microsoft will definitely earn it back. Microsoft doesn't just rely on one thing, they have a lot going for them, as we've talked about before. There's Office, Windows, Excel, and many other software products, plus things like 365. Even their cloud computing power and related services, they make a ton of money from those as well, really a lot. AI is also a very important part, and they might invest further in OpenAI. All of this is true. So this earnings report is actually pretty good. But there's one thing, their president and vice chairman named Smith. So on November 3rd, Smith sold 38,500 shares of Microsoft stock, with each share priced at $519, totaling about $20 million. Honestly, that's not a lot, $20 million, considering his net worth. Right now, he still holds about $240 million worth of stock. He has $240 million in Microsoft stock, and he only sold $20 million worth. Out of $240 million in holdings, he sold $20 million, so that's less than 1/10, actually not even 1/10. Is that a lot? Honestly, it's not much at all. But the thing is, Microsoft's stock price hit a record high this July, and then in mid-October, it climbed back above $550 for a bit. But again, it couldn't keep up the momentum. Right now, it's just pulled back, dropping below both the 50-day and 20-day moving averages. As for this neckline, this blue neckline here, you need to keep an eye on it. If it breaks below this neckline, you should be a bit cautious, as there could be concerns about a short-term top forming. If it breaks, be careful. But for now, it hasn't broken, so there's no need to worry yet. It hasn't broken. It's just that last week, we saw a small drop of about 0.006%. From $550, it slid down, and by last Friday, it had nearly dropped below $500, closing at around $496. In the short term, that's about a 10% drop. A 10% drop honestly isn't that big, and it hasn't turned into a bear market. The first thing to watch is this neckline. The second point, as I just mentioned regarding the shareholding side, is that their vice chairman, Smith, sold $20 million worth of stock. Although that's not a huge amount, it does create more pressure in terms of market sentiment. The pressure from his resignation isn't that significant, since it's just 1 out of 10. But in terms of perception, it gives investors and the market the impression of, wow, why would a vice chairman choose to start selling stock when it's above $500? What exactly did you see? Or are you just trying to cash out while the price is high? If you're cashing out at the top, does that mean retail investors, the so-called chives, are about to get cut? That's why everyone feels the urge to follow and get out too. There's pressure, you know? This is related to news, market sentiment, and share distribution, but fundamentally, there's no problem with the company. Reminder, Microsoft's fundamentals are strong, making money from many sources, with both revenue and profits growing. In the short term, there's more pressure from technical and market sentiment, so watch that. Before the US market opens, strong companies are still doing well. Micron is very strong, reaching $250, up 4.8% pre-market. Supermicro Computer, SMCI, had a weak earnings report, but is still up 4.53% pre-market, seen as a rebound after a drop. In addition, Liaoning and the market are also up 3.8% in pre-market trading, and AMD is up 3% as well. Also, companies like Nvidia, Oracle, and Printer are all up 3% in pre-market trading. So, looking at the overall picture today, with these major index stocks and important tech stocks leading the way in the US stock market, what can we expect? US stock index futures are also performing quite well, showing a very strong performance. Plus, there's a chance that the US government won't shut down after all. At least, there might be a way to keep it running with that funding until the end of January next year. With all these factors in play, and the US stock futures rising, today, the US stock and currency markets are both doing well. For companies that are down, Synthego dropped 7% in US pre-market trading, and Moderna fell 3%. Most declines are in healthcare stocks. Just keep an eye on them. For the Dow Jones Index, the 4 major indices are still above the 20 and 50-day moving averages. Last Friday, it edged up 0.16%. The Philadelphia Semiconductor Index, though it dropped 1% during trading, is still near the 20-day moving average, which is fine. If the 20-day average holds and today it climbs back above, there's nothing to worry about. Its overall bullish structure remains unchanged. Now, what about the major tech indices? Last Friday, they also dropped by about 1%, similarly fluctuating up and down around the 20 and 50-day moving averages. As long as these two moving averages haven't flattened out or started to curve downward, if both lines continue to rise, as we've discussed before, according to Granville's 8 rules or the 5 major strategies of the Dongfeng line, as long as these two lines, the 20 and 50-day moving averages, are curving upward or trending up, the overall bullish structure is still intact. However, with this kind of bullish structure, you must keep one principle in mind, which is, whenever there's a surge during the day due to positive news, good earnings reports, or any favorable developments, you should sell once at the high. Then, when the price pulls back, whether it's because of some negative news or a correction in the fundamentals or the market sentiment, and it comes down to the moving averages, whether it's the 20-day or 50-day moving average, and you see some consolidation happening at these points, you might as well clear your position and look for opportunities to buy back in. So, the principle is, sell once when the price surges. When the price comes down, remember to buy in again under this structure, as long as the moving averages haven't turned from rising to curving downward. Before that happens, just keep using this approach of trading the price swings up and down. This is currently a relatively safe strategy in the market. Alright, that's all for the content related to Yuan Taiwan, and I'm providing you with the latest information. As always, if any of you have investment questions, or if you have any thoughts or opinions, feel free to leave them on the message board or in the chat room. I read every message after class, so don't hesitate to leave your comments. Don't worry about missing anything. If I can't answer your questions now, I'll respond in tomorrow's class. When class ends, please like, subscribe, and share. I wish everyone smooth trading, and I'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.